Welcome to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and it is the long weekend edition of the Real Money Show.
All right.
And we already have a lot for you. One of the lead things we want to talk about is that there was a financial advisor this week in Canada that was penalized for pointing out that he did not recommend investing in banks and insurance companies. And we have reached a point where fiduciary responsibility is now out the window, and you cannot trust what your advisor may or may not say if they're going to be punished by the government. So that's a discussion we're going to have later in the show. But first, let's talk about the yen carry trade, and we'll talk about the stock market. Let's start with the stock market, Jerry. We had pullbacks in the stock market this week. Both gold and silver also pulled back, but gold really hung in at the higher levels, trading in the high 1400 range, pulling back into 1430, coming back to 1450. I think at one point this week we even reached an all-time high. Silver, on the other hand, kind of typical in the dog days of summer, where you're getting these low participation slams in the market, and yet still holding pretty strong in the 28 range. First question, what did you think of the gold market this week? Second, do you think we're going to see a quick recovery in silver? And what did you make of the stock market?
All the volatility this week kind of peaked today. VIX hit 53% rise today. The volatility is just continuing to ravage the stock market. Stocks are reeling. Earnings report was down. Tech, Magnificent Seven from last week, continues the bloodshed. Waking up today, it was the Japan's Nikkei index sees the largest one-day drop since Black Monday, the crash of 1987. This is all on the back of we're seeing the reverse yen carry trade, and it's now the effects are being felt globally, because the yen carry trade, when you can borrow at negative rates and buy elsewhere, you're creating asset prices, asset price peaks and bubbles in various markets globally. And now this has come to roost, because Japan, despite all of the cuts that we're seeing, England cuts rates, the Swiss National Bank cuts, Euro cuts, Bank of Canada cuts. Japan shocked the world. They want to protect the yen after years of the yen being the lowest, one of the lowest currencies in the G7. Japan surprised, raised rates back up into positive territory at 0.25%. And now this is a huge negative, because when you have all that debt, the service to service all of the interest on the debt becomes to catch up. So we're seeing the worst day today. We're recording on Friday, the worst day since 2020. $2.9 trillion wiped out from stocks this morning. But volatility continues to ramp up, as I mentioned before, from the earnings, and it's even being exacerbated by the volatility-linked funds that are dumping more stocks because the algorithm tells them to. If volatility rises, dump even more.
So are you saying that what you're attributing, at least in large part, of the market pullback in the United States is due to the yen carry trade unwind, that all of a sudden when they raise interest rates, those who have been borrowing it at a lower rate and buying stocks with it or whatnot, all of a sudden have to unwind the trade because they're going to have to owe more because the value of it or the price of it just went up.
Yeah.
Paying it back.
That's right. And this is a type of volatility that proves to be very good for precious metals. Despite all of the volatility, gold still ends up on the week 3%, silver 2% up, despite all of that noise. And further to this week, the Federal Reserve met on Wednesday, and they're hinting at easing monetary policy soon. They kept rates stand pat at 5.5, steady at 5.25 to 5.5. Their statement indicated a softening stance on inflation and more balanced view on employment. Yeah, right. But the CME Fed Rate Watch tool indicates that they're expecting a Fed rate cut 94% chance of a Fed rate cut. Now, you factor in all of the noise that we're seeing today, all of the red across the world stage. I think what we're seeing now is an argument for them to even expect a cut before September. This is what JP Morgan's actually forecasting. JP Morgan now, according to Radar, forecasts a 1% rate cut by November. This is what I've been talking about before. As they've been raising rates, they were raising rates dribs and drabs. The inflation was taking off to 8%, but they were really fighting the inflation with a quarter point. That's like a water pistol, Jeremy, compared to the inferno of inflation that you're trying to fight. And now we're expecting it to just going to start cutting by quarter point here and there. No, I'm expecting a slash. I'm putting my neck on the line because I think, look at this collage on our desk, Jeremy. There is risk and there is uncertainty. And, when the indicators are not working for us anymore, and the purpose of the show, I think, is to really highlight the current trends. And our goal is to highlight these trends. And right now, the trend is our friend. If you're in precious metals, and if you're looking at precious metals, this is the trend. This is the current that will take you out of all of this uncertainty, out of all the worry, and into positive territory for yourself, your family, and your portfolio.
The number 18778-SILVER, the website, guildhallwealth.com. Yeah, with Guildhall, you can acquire gold. It's very safe and simple. It's uncomplicated. You're just acquiring actual physical metal, whether you're buying it direct over the phone, by appointment at our office, or through our e-store. We also offer storage facility at Brinks where the product is fully allocated and segregated. You get your inventory report. You can go to the vault, personally audit your holding. Liquidity is assured. It's fully insured. So you could be on vacation. You need to sell. Bang, you can sell right away. It's one of these markets that are extremely liquid. And maybe that's part of the reason why you get these pullbacks at the same time sometimes with the stock market, because you're taking profit where you can, where it's liquid. Because, hey, we've all had stocks that are down 50%, and you know how illiquid something like that really is, because you're just either capitulating to the loss, right? Or you're sitting with it. Mm-hmm. You're stuck with it. And with gold, both gold and silver are up 18 and 19% in US dollars this year. In Canadian dollars, they're both up over 20%, close to 25%. So they're really hanging in there while this volatility takes place. But if you've never had an RSP, this is the time. Same thing with the TFSA, especially now that they've hiked up the capital gains tax. More important now than ever, you should be putting money into a TFSA so that you don't have to worry about capital gains. And when we get into the projections on gold and silver later in the show, you're going to get really excited to make sure that you want to protect those gains. And it's funny, I have a lot of conversations this week where before we even get to, so how do I actually do this? There's these conversations about, so how does the capital gains work on this? Because you can tell that people know that this is going to be making very good money, right? Right, Jerry?
Yeah, exactly. It's top of mind. When you're in the precious metals markets, how we perform during times of this uncertainty and high inflation, especially when rate cuts occur. The data shows that rate cuts are not very good for stock markets at all. We talked about that twice on our show previously. And it's not really a relief rally for the stock market. At first, it may seem like a relief rally, but then afterwards, things really come unwound with the stock market, because a rate cut, in essence, what it is, it's an emergency measure. Something's going on in the world, and we have to cut rates. We have to loosen things up and get that helicopter money going.
It's a narrative, right? And this is a game that they've played. Let's make money cheap. Let's keep going. Let's create distortions in the market because we're here for a short time. We're not here. We're here for a short time and a good time, right? We're not here for a long time. And so they just want to keep the party going. And there's a period of time there where they could threaten to lower interest rates and the stock market would get giddy and there'd be a lot of trading action. But eventually you hit where we are now, which is you're at the wall. Do you want to stop printing money and suck it all out and have massive deflation and then at the same time raise interest rates so you're cutting off economic activity? Or are you going to give into it? Are you going to drop interest rates, which means you're throwing in the towel on inflation, which is your whole mandate to control. And basically what you're saying is you don't have control. You never had control.
Never.
You tried for a while. People, never fight the Fed. People didn't fight the Fed for a long time. And now we're at the stage where the bigger they are, the harder they fall. Everyone knows that the emperor has no clothes. Name your metaphor. Here we are. And they're in trouble. Their credibility is in trouble. I was listening to Michael Oliver this week. He's a great analyst in the gold and silver market. I never thought I'd hear it out of him. He said, "Oh, there might not be a Federal Reserve in 5 years." Mm-hmm. That's how far we've come. When I started working here, and I read Edward G. Griffin's book, it came from Jekyll Island, A Second Look at the Federal Reserve. Most people didn't even know it was a private entity.
Right.
They didn't know it was a private cabal. Now, many people know about it, and now the criticism of the Fed and their handling of these bust and boom cycles is at a point where, they're not only is their credibility in trouble, but their institutions in trouble too.
Yeah.
Because you can avoid reality, you can't avoid the consequences of avoiding reality. And what we offer at Guildhall is something real, because real is rare, and real's been around for thousands of years. I just heard that they found a ship. A Spanish ship.
Yeah.
They're pulling out galleons, like gold.
It's
That's
mine.
been sitting in the ocean for
And they're all fighting for
hundreds
it.
and hundreds of years. It's still money, and it's worth more than ever.
Yeah, it's like the
All
Outer
right.
Banks show. I don't know if you guys watch that show. Get your gold.
Gold, physical silver. Wait till you hear where it's going. You're going to be excited. Yes, these are tough times, but there is opportunity. There are silver linings. The number 18778 silver. The website guildhallwealth.com. You've got car insurance, you've got life insurance, home insurance. Do you have insurance for your wealth? Do you have insurance for your portfolio? We're seeing a lot of volatility. We've seen the stock market move up for a good amount of years, and now we're starting to see the fallout of it, that there's consequences to the Federal Reserve making money cheap and then making it expensive, and everybody just being whipsawed through the market because of their decisions. And we've seen boom and bust cycles. They haven't done very well to control them. In actual fact, if you look at the history and actually study it, what they've done is they take each bubble bursting and they blow up a bigger bubble. And they do it again and again. And we are telling you right now that we are at the end game of blowing up bubbles. There is not going to be someone standing up in Congress and saying, listen, we need to borrow $500 billion, come up with a number to get us out of this. We already hit the precipice of that back in 2008. Quantitative easing that no one had heard of, and we entered into an era of absolute financial distortion. That is reaching a peak, and it's going to change, and it's going to change rapidly. So you need something that has stability, and gold and silver have always provided that stability because they've always been money. Let's get back to so call us.
Please do.
and find out how to hold it in a registered account for your retirement, and protect your retirement, protect your pension. Build on it. We've seen people who are up 80, 90, 100, some over 100% of holding physical gold and silver over the years. And I can tell you they're very happy to have had this in their portfolio, and they're not ready to sell. They're not going to be ready to sell until gold and silver's value has reached a point where you can say, oh, I could buy a house in Toronto for a couple 100 ounces of gold, or the ratio between gold and silver falls to below 35-1. I mean, there's people who think it could go the other way. The Dow gold ratio, we're trading at probably 16, 17-1 right now. In 1980, it was 1-1. In 2011, it was 4-1. We're far away from 4-1. And so again, when we look at the projections of, we're going to talk about in a little bit later, of where we see the prices going, you should be very excited about holding an asset like gold and silver, which, by the way, when you're talking about volatility, to bring it back here, Jerry, there's no counterparty risk when you're holding gold and silver. I could hold cash under the bed, but I can't stop the government from printing it. I could hold gold under the bed, and who's gonna print it? They can only add to the supply by 1.75% a year.
Right.
I'm pretty safe.
Totally.
I'm pretty safe if they can only improve the stockpile by that much. Hence, the price is outpacing inflation. Talk to me about the Fed a little bit more.
You mentioned in the last segment that yes, our back is against the wall right now. Inflation is at a it's nonstop. The printing of the currency has been the problem. The Federal Reserve is being highlighted recently. They've been in the news for their negative, all of the negativity that they've caused. The money printing is not the solution, which is why we're seeing the currency being devalued year over year over year. They are the source of the issue. And this begs the question: if we are against the wall, we are in a war, we're in a fight. We need to understand who this enemy is and where the source of the problem is coming from. And it's coming from the Federal Reserve and the Bank of Canada. And we will look at what's going on in the Bank of Canada. And we look what the Federal Reserve and the Bank of Canada have done over the course of the last 4 or 5 years. They're the culprits. So as we are, looking at the, society, just the way things are going socially, a lot of focus recently has been on immigration, and the immigration is the source of all the inflation. No, it's not. This policy was actually highlighted.
That's almost a cover-up.
It definitely was, and this was something that was highlighted by Stephen Punuasi. We're going to talk about a little bit better and more so further in this segment, because Stephen Punuasi, he's the co-founder of Better Dwelling. It's a very popular Canadian real estate website.
We've been talking about We've quoted Better Dwelling on this show for the better part of 5 years.
Yes, and he highlighted in one of his posts, I think a few weeks ago or last week, where the inflation started. In 2020, just a reminder, in 2020, inflation was already healthy at 2.2%. And then the Bank of Canada went on a borrowing spree, COVID. Not just for emergency-related issues or masks. There's an email that shows the Canadian government rejected an offer for major N95 suppliers, stating masks are not a priority. But when full helicopter money with no scrutiny, the money printing did not go to anything health-related, but it went to banks. It was buying mortgage bonds, all to raise home prices. This is where the inflation came from. And then afterwards, the immigration policy of letting everyone in as a cover for the inflation started to ramp up. The inflation, bringing everyone in to the country. The source of the inflation was always the Bank of Canada. The policy of bringing the people in was a massive cover-up, Jeremy.
So you're saying that just the fact that they bought bonds pushed the real estate market up, is that right?
That's right. And not just that, mortgage bonds, even mortgage-backed securities, you name it. Everything just went to financial. It didn't go to the mom and pop, your small business.
Well, it's also the fact that the small and pop businesses were shut down. They got a measly CERB check. It went to nefarious people as well as people who really needed it. And some people who really needed it didn't get it. And that came at a cost of zero productivity for the actual economy. And then you wonder where the inflation came from. So, it is the mouse and the mousetrap. The mouse gets caught in the trap and wonders why the cheese was free.
Yeah, good one. Yeah.
Guess what? The cheese is not free. You're going to get you.
They're going to get you.
And they got you.
Yeah.
Right? Now, we could say that they're ignorant. We could say that they just are terrible at their jobs, which is true too. The Pentagon in the United States lost, billions of dollars went missing, and they ended up overpaying Zelensky by a few $1 billion.
Just a few.
American taxpayers just paid him. And you're saying that we're supposed to assume that somehow the Pentagon, their accountants were just negligent? Mm-hmm. Really?
Exactly.
Like that, you can't have it both ways, right? Nefarious or negligent, they're both just as bad.
Yeah.
It tells you that you got to make a change.
Yeah.
And you can't keep your job.
So he further writes, Stephen writes, immigration ramped up a year after all of this printing to create a cover and generate more state-subsidized loans and handouts. And he wrote this in Canada's CMHC internal messages shows housing supply narrative BS. This is what we're seeing. And what's going on with the people. It's a lot of misplaced anger. We're redirecting our anger to each other. The people, more division.
Identity politics and all that stuff.
When really and truly the Bank of Canada is lost. The Bank of Canada is cutting The loonie has lost so much value in the last couple of weeks versus the US dollar and other currencies. I mean, we're at a 14-month low, and the Bank of Canada is in no way, shape, or form positioned in any way to protect our loonies and protect our wealth. So we're on our own, right? We're on our own.
Well, let's talk about being on our own, because the gentleman from Better Dwelling pointed out in another article about a financial advisor who got sanctioned for recommending, for criticizing investments into banks and insurance companies.
Yeah.
Is that right?
This one blew my mind, Jeremy. And we always talked about this because we deal with a lot of affiliates. And if you are a financial consultant, give us a call, because we work with a lot of financial planners, consultants, accountants who want to be able to offer gold and silver, another option outside of the regular, traditional, conservative stock, bond, to cash approach. It doesn't work anymore. They're all going in the same direction. You're not fully diversified. So this one blew my mind, and it was just another signal that, hey, you're really on your own here. Canada's financial regulators, he writes, are heading in a dangerous direction. An advisor in Quebec was disciplined for criticizing banks and insurance companies, fined $2,500 for saying insurance is a bad investment for the middle class. Goodbye fiduciary duty, and hello loyalty to crappy investments. And I can't read the French, but it's all here, and it's on his post, and I definitely recommend, betterdwelling.com to get real world news and what's going on, especially for us Canadians, what hits close to home. He wrote one recently about the Canadian real estate prices. It's facing the worst market since the 90s recession, according to CIBC. So he's doing a great job. Hats off to you for highlighting these things. But we always knew that this fiduciary responsibility is just not there anymore.
It's about trust, right? It's about trust. What this all comes down to is trust in the institutions, trust that the Bank of Canada is making the right moves. I will push back a little bit on you, Jerry. I think it's not just the Federal Reserve. It's not just the Bank of Canada. It's also the government that's making these policies of spending and debt creation. And so they are fighting each other in some ways. One person's trying to be conservative and the other one's just spend, spend, spend. But the problem here is trust, because if you have a financial advisor who is going to be sanctioned for criticizing particular investments, how are you supposed to trust them when they tell you to invest in something else? Now, I appreciate, we talked about this before the show, that could go both ways. Someone could say to us, well, we don't, it's all misinformation now. So how do we trust that gold is the right way to go?
It's true.
And that is a strong point too, because at this point, they just want to muddy the waters with anything that's going to confuse people and have everybody's head spinning, because they can't control the situation, but they can control your head spinning and having you just tune out, right? Well, I don't know who to trust, so I'm just not going to do anything. At the end of the day, we just encourage people, do the research, look at the gold and silver market, I wouldn't say look at the charts per se, but look at the fundamentals that have driven gold and silver over the years.
Yes, exactly. I mean, we want to thank everyone for listening and tuning in week after week to the Real Money Show. I think our goal really ultimately is to highlight current trends, as understanding where things are headed requires accurate indicators and even trustworthy advisors. For example, inflation is often reported at 3%. But this figure is far from the truth. We're spending much more than that. Another is consumer spending and GDP. The GDP figure came out last week, but it included credit card spending, and it didn't show delinquencies and why Visa is reporting a horrible earning. And just today, the jobs figures that came out, a horrible jobs number, but now they're saying it's recession. Well, guess what? The Psalm rule showed that we were in a recession way before. Why? Because every single positive splash of a job number that came out, it was revised downwards 2-3 days lower, quietly. You didn't hear about it.
It comes down to trust yourself. Make your own decisions. Do your own research. Don't just trust blindly what everyone's saying. The media loves to gaslight everybody. They love to gaslight. They love to give people the wrong information and protect information that's inaccurate, right? We know the CBC's bought off by the Liberal government. So how are you supposed to trust where to get the information? You have to do your own research. You actually have to do your own research. And that means risking being a conspiracy theorist.
Mm-hmm. Maybe lose some friends.
Yeah, but you can always make more friends who believe what you're saying. So, look, at the end of the day, we're saying just do your own research on gold and silver. We're going to show you what the professionals think in this market, and they have no skin in the game to say which way the market's headed, but these numbers look really, really good. So if you want to hold some physical gold and silver in your portfolio, and you can do that direct, you can hold it in a vault, you can even put it in your registered account, and that's fully allocated, fully segregated. That means no paper, no counterparty risk. You're not investing in a firm or investing in a fund where they own the product and it costs you nothing to get in, but you have no protection. Why would you, if I need insurance, I'm not going to invest in an insurance company. I actually have to go out and pay for actual insurance. And that's what physical gold and silver is going to do. It's tough, it's durable, it's dependable. It's been around for a lifetime, and it's only been moving up, up, up with very little downside in this market. The number 18778 silver, the website guildhallwealth.com. We offer physical gold, physical silver. We've been in the market since 2002, and we deal in physical. There's no paper, no futures contracts, not an ETF. This isn't the pool account. It's actual no nonsense. Hold it in your hand, physical gold and silver. And I know sometimes people, they watch YouTube videos and then they hear people say, if you can't hold it, you don't own it. And that to them means it's either in my hand at my home or it's no good. That's not true. There's a point at which you have to understand the security aspect of holding product at home and the risk that you're creating for yourself. Whereas having it at a vault where it's physically allocated, secured, insured, be able to buy and sell on a phone call, that's huge. If you're away on vacation or you've moved out of the country and you want liquidity, you want to be able to pick up the phone and sell. We're not even talking about when the market tops out and the market starts coming down, trying to get the logistics together to pack up, 600 pounds of metal into the back of your car to get it somewhere where you can sell it. This is the whole point why you have allocated storage. And the cost of it is minimal. It's nominal for what you're doing. Mm-hmm. And then, of course, the registered accounts is, to me, one of the best ways to do this because it implies you're going to hold it long term. And the longer you hold gold and silver, the better the benefits become. The longer you hold it, the more you realize you really want to have this and need it in a portfolio. And only time can give you that. And with registered accounts, whether it's a Lira or a LIF or a RIF, a locked-in RSP, you have that time to let the market develop. Now, we've been very lucky this year. Market's up, close to 20% US. It's over 25% in Canadian dollars. And it's been a great time to get involved in the market and kind of get that instant gratification. But Jerry, I think moving forward, we're going to have a lot more of that instant gratification. Gold's been at all-time highs. Silver's got a long way to go. But we have analysts in the gold market and analysts in the regular financial markets all pulling for gold and all looking for much, much higher prices. Tell us about Peter Schiff and others.
Yeah, all on the back of what we're seeing, the bloodbath in the whole stock market this week, and it's just culminating for cries for rate cuts. We want this relief, and it's an argument that is worth hearing, and it's now, I think, justifiable for the Federal Reserve to fast forward, and I think that's what Peter Schiff talks about. He mentioned today that not only will the Fed likely cut rates in September, remember the percentage of them, the likelihood is about 95% in September, but it may cut mid-meeting to rescue collapsing stock and labor markets. Rate cuts will fail to revive the economy or employment, but they'll heat up already hot inflation. This is not your father's stagflation. It's much, much worse. Stagflation, this is what we're seeing. high inflation, low growth. The earnings show it. The mining company shares are showing it. First Majestic was down huge this week. Yes, they're involved in the gold and silver market. However, when you're dealing with high costs to operate a business, this is the counterparty that you want to eliminate. You want to go directly for the asset that protects your wealth, that will perform and act as your reserve when everything else is failing around you. It's going to be that liquid, that go-to asset that performs during stagflation. Just remember, the two assets that did perform are the monetary metals. Because when we have a currency problem, you need to retreat and acquire that safe haven. That's what performs.
So what you're saying is people want the Fed cut to happen. They want the rescue of a Fed cut, but what they're gonna get in return is even more inflation potentially.
Exactly. The interest rate hikes, that was the only tool for the inflation, right? This was the whole thing of rate hikes, is they needed something to cut when everything hits the fan, and that's where we're at today.
I thought they were just looking to get more money out of people who had variable mortgages.
Probably.
Way to suck them dry.
Yep, that too.
You know, now that there's more delinquencies than sucking dry the people who had variable mortgages, the banks are feeling it and they're saying, please cut.
Yeah, exactly. And just this week, I mean, this is mind-blowing stuff from Kobasi, and I think we all heard this. The U.S. federal debt just hit another record, and it's $2.5 billion from reaching 35, and it's already hit $35 trillion for the first time in history. The U.S. debt skyrocketed since 2009 by $13 trillion. The debt to GDP ratio is now a massive 122%, up 19 percentage points in 5 years. The federal debt in the U.S. has never grown so rapidly relative to the economy. We are on an unsustainable fiscal path. And to comment on that, Jim Rickards, gold hitting an all-time high. Over $2,500 per ounce, he says. That says very little about gold and everything about the dollar. It means the dollar is at an all-time low when a non-debt metric is used. Cross rates tell you nothing intrinsic. Gold tells you everything you need to know. Gold valuing your assets. This is the message. Measure your wealth in ounces and not worthless currencies. Understanding what your assets, what your reserves are denominated in. All of the currencies now are being ravaged. Everyone's cutting their interest rates, and this is only going to get worse. Position yourself in precious metals because the trends are our friends in precious metals. We are headed to skyrocket levels, and you do not want to miss this. And we want you to give us a call at 1-877-8-SILVER, the website guildhallwealth.com.
I love what Jim Rickards said. He's an author of many, many books about physical gold and about the financial crisis that we're seeing around the globe. I like the idea of measuring your wealth in ounces because if you look at dollars, you say, what's the value of the Canadian dollar? I don't know. It's this against the U.S. Well, what's the value of that? I don't know. And you say, okay, well, what we're basically saying is there's two ships tied to each other. We know where we are in connection to in relationship to each other, but we're on an ocean at night and it's cloudy and we have no idea where we are.
Yeah, exactly.
But when you have gold, you have the measuring stick. And that's why all of these central banks around the world are accumulating it because they don't want counterparty risk. They want their sovereignty. They want to know that if they have to balance trade, they can revalue gold. And that comes straight from the Dutch central bank themselves speaking about that. So there's many, many reasons to hold physical gold as a means to protect yourself against geopolitical unrest, against the financial issues, against inflation, and we're going to talk about where it's going. That number, 1-877-8-SILVER, the website, guildhallwealth.com. Get the physical gold and silver that you need to protect your family. You need to protect yourself against the stronger inflation that we believe is coming your way. And physical gold and silver, a finite asset that's been around for thousands of years as a store of value, is one of the things that is going to protect you and takes the guesswork out of the market. You don't have to try to chase yield. You just hold an asset that's been a store of value for thousands of years. Jerry, let's talk about what some of the mainstream financial analysts are saying about physical gold.
Well, we are on the road to $3,000 gold. Gold prices have reached new record high 3 times in less than 3 weeks, peaking at over $2,500 an ounce. December gold futures settled at 24.80 an ounce on Thursday. Intraday trading hitting 25.06. According to George Milling Stanley of State Street Advisors, if the economic and political environment becomes more and more favorable, gold could trade between $2,500 and $27 real quickly. Factors such as geopolitical conflicts, war and things in the Middle East, the weakening dollar, and potential rate cuts could drive gold to $3,000 per ounce. And I certainly see that, Jeremy, because further to his office talking about that, another gentleman from the same, I believe it was from the same office, I'm just looking for that article right here. One sec, if you could just pause that. I lost myself. Yeah. From the same office. I'm going to pick up from there. Yeah. Yes, an analyst from the same office, Robin Swee of State Street Global Advisors, spoke and said there's 4 factors fueling gold's continued rally that will push gold prices even higher going forward. These are the geopolitical tensions, central bank gold buying demand, and expectations of rate cuts, and increased safe haven demand amid economic uncertainty. And they're certainly right. Every time they cut interest rates in the U.S., this is what pushes gold and silver higher. Even the mere expectation of a U.S. rate cut, we're still at all-time highs. They haven't even cut yet, Jeremy. And the minute a JP Morgan style 1% slash shocks the market, guess what happens to gold and silver? It's that coiled spring. It's that catalyst that will push gold and silver into territories we have never seen before. And you want to have your wealth in ounces, because every $1,000 rise in your portfolio of hard assets, this is going to be life-changing for yourself.
And not just that, there's also the risk of the financial system itself. I mean, we're not sitting here saying that you should pull all your money out of the bank and that there's going to be a massive bank failure in Canada. But it could get sketchy for a little while. And ultimately, what's the value of the Canadian dollar through all of this, traversing all of this?
Right.
It seems to me that they're content to just continue to print it. And if they lower interest rates, you're just unleashing more inflation at a time where you've already stifled productivity.
That's right.
When you put all of this together, you mix all of these ingredients together, you say this is just a bad situation. And as Peter Schiff said, this is not your father's stagflation. There is no disco party.
No.
This is going to be bad, and it could go from bad to worse. And what would be the worst thing that happened if you hedged against it? What would be the worst thing if you prepared, right? These preppers, what's the worst thing? Nothing happens, and you were prepared.
Yeah, you lived a good life. If you didn't have to sell your gold.
You want to think about the worst situations and be prepared. The thing is there's an upside here. We're talking about gold going to 3,000. Michael Oliver was saying, it could go to 8,000 this week on his interview on Arcadia. And he was saying, look, when you look at those numbers, there's always a ratio between gold and silver during these bull markets. And that could put silver well over $200 an ounce. So think about it. What's it going to take for the stock market to double from here? What kind of economic activity? What kind of productivity are you going to need that Nike doubles its sales, that Apple doubles its sales, that car manufacturers are going to double their sales in this environment where people are losing jobs,
right,
where the amount of jobs they're creating is meager? You got to think about that.
That's right.
There's always winners. Absolutely. There's always winners. There's always new technologies and new things.
Yeah.
But on the whole, are you saying a small percentage is driving it all?
No, not at all.
So you got to think about that and say, look, things move in cycles, and gold's been moving up through the whole thing. And yet it's still incredibly undervalued against those debts and against the stock market.
Oh.
It's done its job. Yet it's got so much further to go. That's why we're excited about this. You can take advantage of it.
Exactly. And following the cycles is just that. And we are in that geopolitical and political cycle with upcoming elections coming up. This is another tailwind for precious metals. Very, very supportive for precious metals. Especially we have clown show politics doing their politicking. When we have updates from the Biden administration that 25 million student borrowers are going to potentially receive a student loan forgiveness update. Now, these 25 million borrowers, Jeremy, could benefit, not will benefit. How many of those loan forgivenesses are backtracked? But this is all politics. Imagine 25 million borrowers and each borrowed $40,000. You can't just get rid of debt. You can't just forgive debt. It has to be refinanced. And the only way to refinance the debt is it bleeds into the whole gold standard narrative, and that's exactly where we're headed.
You gotta do your own research, and doing your own research doesn't mean just going on Google and looking at the first 2 pages. Honestly, if that's the extent of your research, just try to go a few more pages back past that and see what others are saying, and not necessarily just trust the mainstream.
Yeah, 100%. Wisdom Tree shares their outlook for silver. Silver outshines gold with 22% return. Sees upside potential, supply deficit expected in the silver. Silver squeeze is still on. Very difficult to sell this, to get the silver, even in dips. Jeremy and I, we were on that call last week when the prices dipped to 27 and change for a little bit. That was very short lived. And how much silver did we end up with? We were on the call, we're trying to get ounces. We ended up with 3,000 ounces of silver that night. It was a pittance for what's going on. And where this is headed, we have Morgan Stanley forecasting gold prices to 2,600, and it's just getting better. Even the global CIO office CEO, Gary Dugan, this week, the CEO of the office, expressed his views on various investment assets during an appearance on Bloomberg Markets Asia on August 2nd. Dugan highlighted gold as his preferred asset, while also discussing tech and bonds. His insights provide valuable perspective on current market trends, and the trends for precious metals are our friends, Jeremy.
Way to go, Jerry. Way to wait for the last 30 seconds to give us the best part of the entire show. All of the projections that were coming. I love it. You kept people waiting right till the very end.
I tried.
Listen, if you've missed a show, if you want to skip to the very end of a show just to hear the best parts that Jerry tells you, the projections, we always post to YouTube and to Rumble and on X. Please, great to have you with us over the weekend. We hope you enjoy this long weekend and think about some of the opportunities in the market, and give us a call. The number's 1-877-8-SILVER. The website's guildhallwealth.com. We love talking about the market. We'd love to talk to you about the market and help you with your research in the gold and silver market. This has been The Real Money Show on 640 Toronto.